This is the Investing News Network, and I'm Georgia Williams, here with you at the 51st edition of the New Orleans Investment Conference. Joining me today is Stephen Soock, Vice President of Investor Relations and Development at Heliostar, which trades on the TSXV under the ticker symbol HSTR. Thank you for being with me today, Stephen.
Well, it's a pleasure to be here.
How are you enjoying the conference so far?
It's great. It's my first time here, first time at the conference in New Orleans. So it's been a lot of great people coming by the booth, meeting lots of good investors, seeing a few good presentations, and enjoying the city.
Awesome. Could you give us a little overview of Heliostar for those that might not be familiar with the company?
Yeah, absolutely. So we're a junior gold producer on track to go from 30,000 ounces this year to 300,000 ounces a year by the end of the decade. Our strategy is powered by the fact that we are a producer, but we really are a development and growth company. So think of us less as a junior producer and more as an organically funded developer is how I like to frame it. We picked up the portfolio of Mexican assets from Argonaut Gold, first the Ana Paula project in 2023, and then the whole rest of their portfolio, including 2 producing mines and 2 additional development projects down there, all for $15 million. So it was kind of the deal of a lifetime, but right timing, right situation, right contrarian view on Mexico. This was about a year or 2 years ago when sentiment on mining in Mexico was at an all-time low. We thought the pendulum had swung too far and have been borne out as things have really improved greatly, and we've been able to get a number of permits and approvals to be able to restart the mines and have that power the growth of our business.
So that's very exciting.
Yeah, it's been a great time to be with the company.
Absolutely. And your recent quarterly results show progress towards cash flow generation. How does your current cash flow and capital allocation strategy support both short-term operational needs and longer-term project development priorities?
Well, I mean, I've got to give a little bit of credit to the gold price here. We had a solid strategy, and we were comfortable of executing that at $2,800 gold. The fact that gold's $4,000 really affords us the ability to tackle a bunch of our things concurrently. Right now, our operations are making about $15 million a quarter in operational cash flow. Now, we are right now sinking that back into the business and these near-term growth opportunities that we see. There's a number at La Colorada in terms of processing stockpiles. We've been able to restart expanding an open pit that we think we'll be able to start that cutback next year. An early works program at Ana Paula, and we're actually restarting our San Agustin mine, going from residual leaching, where we've been making good money over the last couple of months, back into primary mining, doing a cutback there. So, that's kind of the short-term allocation, with the idea that investing in these near-term growth projects, being about net cash neutral, I'd say, until midway through next year, at which point we expect to generate significant free cash flow. The idea is that we'll be able to use that free cash flow onto our balance sheet to be able to fund the equity portion of the Ana Paula construction financing. So we're unique in the way that we'll be able to grow, to 10x our production, potentially without issuing another share. So you don't get that sort of equity dilution that goes along with your standard development trajectory.
Right. And Heliostar has outlined steps to grow NAV across the portfolio. Can you share which initiatives you see as the most immediate value creators for shareholders?
Definitely. The first one we've kind of checked off. We put out an updated study for our La Colorada mine, showing an optimized resequencing and the impact of drilling that we did earlier in the year. So that was our first, call it NAV growth step. The next one that I'm really excited about is we're going to put out a PEA for our Ana Paula project. It'll be the first time the market will see the economics for the bulk tonnage high-grade underground project as we envisioned it. Recall, this was a project that was previously scoped as a big low-grade open pit with marginal economics and a complicated flow sheet. We said we had no interest in that, and credit to Sam Anderson and our technical team, saw the potential that 80% of the economics were contained in this high-grade core. So completely reimagined the geologic model, reimagined what the mine would look like, and we progressed down that path with great success. So being able to show the impact of that rethinking and the economics to the market, I think would be really exciting. We've been, saying we think it'll be around 100,000 ounces a year for probably 8 to 9 years in the PEA. At about $1,000 all-in sustaining cost, pretty incredible margins, costing about $300 million to build. So something that's very manageable for Heliostar to finance, between internally generated cash flow and project level financing. So that's kind of our next major NAV growth step that I think will surprise the market to the upside. And then the last one that we're looking at this quarter is an updated pre-feasibility study for our Cerro de Gallo project. This is more of a pipeline development project, but we think that'll be the next 100,000 ounces we bring on after after Ana Paula. Right now, there's 2.9 million ounces in combined resources there that we have to treat as historic because we just haven't had time to put out the study, put our own stamp on it, refresh those numbers. The study was last done in 2020 with a very different gold price environment in the economics. So I think that'll be a fun one, and that's due to come out before the end of the year as well. So those are our major now growth steps in the near term. Lots to come. And then the big one will also be the Ana Paula feasibility study. We've always targeted a feasibility study in call it Q1 2027 sort of thing. And the PEA was a nice way to kind of put a bow on some of the early work we've been doing, be able to present it to the market and not ask them to wait a year for those numbers, give kind of an interim data point, if you will.
Yeah. That's a lot of exciting developments.
It is, yeah. It's great to have a large growth pipeline, so it gives us a lot to work on at all the time. We're certainly never bored, that's for sure. And it's fun to be able to show that to the market and see, demonstrate where that growth comes from.
Absolutely. And in balancing exploration upside with near-term cash flow, how do you prioritize projects across your portfolio?
Yeah, I think you can kind of think of our strategy in three levels. Over the past year, we've really spent time bedding down production. We have a solid production plan, get the assets cash flowing, have that base from which to work from. Then we look at immediate resource growth. So across the portfolio, what are the low-hanging fruit opportunities where with a little bit of drilling, a little bit of money, we can add to mine life, we can find ways to bring cash flow forward from opportunities within the portfolio. So we are doing a lot of drilling to that end right now. At La Colorada, we're drilling off something we call Veta Madre Plus. This is another pod of about 30,000 ounces that actually is in our M&I category, but hangs together on just 2 high-grade drill holes. So, we take a fairly conservative technical view, so we want to do another 5 or 6 holes, confirm it's there before an additional cutback. At Ana Paula, we're midway through a 15,000-meter drill program focused on upgrading inferred resources. So that's kind of the main focus there, and a little bit of step out and delineation drilling to be able to support that feasibility study next year. And at San Augustine, we've got oxide expansion opportunities just around the area that we got the new permit to expand into. So that's kind of the resource growth layer. And then across the portfolio, then there's some bigger shots you want to take, as you mentioned, on kind of the true exploration.
Right.
So at La Colorada, there's been virtually no exploration outside the immediate mine trend. It's a large land package with lots of historic showings and good soil sampling trends, some of which have never seen a drill hole. It's kind of incredible. It just speaks to the mindset of the previous operators, and we have a bit of a more explorationist mindset to apply. At Ana Paula, there's a few areas near the deposit, a few hundred meters away from planned infrastructure that we want to tackle, so stay tuned for that. And then at San Augustine, there's a large polymetallic sulfide deposit under the oxides. Now that we want to really chase some of the higher grade structures, some breccias, some feeder structures within that. But again, that's an exploration shot. So that's kind of the 3 layers. We've got production bedded down, resource growth, and then the exploration sizzle on top.
Yeah, it's like a one-stop shop.
That's our plan.
Your recent drill programs have generated promising results. You were talking a little bit about them. Which discoveries or zones are most significant in terms of potential near-term production and economic impact?
Yeah, I think the Veta Madre Plus, that's one that's already near a planned cutback. So I think if we're able to prove that out quickly, we could really expand the mine plan there in short order and be able to pull that exploration opportunity into near-term cash flow, potentially as soon as next year. So I think that's one we really want to tackle quickly and put a plan around. As I mentioned at Ana Paula, some of these new zones kind of near planned infrastructure. Still early days on those. The geos are excited. I haven't seen the numbers yet, but I can tell you when the geos get excited, there's usually a good reason. So that's another one that won't make it into the PEA, obviously, but could be an opportunity in the feasibility study to show kind of an expanded mine life and add ounces that are coming at low cost because we've already planned to put the underground infrastructure in. So I think those are the 2 that are the most exciting on the discovery side.
And as we wrap up, 2025 and head into 2026, what should investors be looking for in terms of news coming out of the company?
Yeah, I touched on a few of them. The Ana Paula PEA is the next one in short order. Following that, we'll have our Q3 results. Results don't always get everyone excited, but it does show that we're executing our business plan. We are generating cash flow, and we are growing as a business, and you can see that in the numbers. So that I think will be a nice data point for the market. The Cerro de Gallo pre-feasibility study should be out early December. And then from there, drill results across the portfolio. As I said, they'll have a steady stream of those. The last thing that I think investors should watch for is we're planning to extend a decline at Ana Paula. Previous operators put in a 400-meter decline and then stopped when the company was taken out for a different asset. We really want to get back in there now that we have certainty of cash flow from the rest of the portfolio. Push that into the ore body, start to de-risk that, and do some of the down plunge exploration at Ana Paula. So that's a little bit longer. That'll support both exploration and de-risking the path to production. So that's one that could generate a lot of news through next year.
Yeah, absolutely. Well, thank you very much for taking the time to speak with me today. This is Stephen Soock of Heliostar, and I'm Georgia Williams. I hope you enjoy the rest of your conference.
Thanks. You too.
No problem.